Welcome to the deep dive. Today, we're really getting into some fascinating material. We're looking at Global Banking Trends 2025.
That's right, pulled mainly from Across the Divide by the banker. It's quite revealing.
Absolutely. And our mission for you is simple. Unpack the key insights. We want you to understand which regions are thriving, which are, well, facing headwinds, and crucially, why.
And the headline trend, really, for 2024 is this idea of fragmentation. It's quite stark. You've got U.S. banks pulling ahead quite strongly.
While others lag.
Exactly. Europe and China, they face some pretty significant challenges. And it's not just, numbers on a page. It speaks to deeper economic stuff, even cultural currents, maybe.
Okay, fragmentation. Let's dive into that. So where are the bright spots versus the struggles? You mentioned the U.S. pulling ahead.
Yeah, definitely the U.S. It's, well, remarkable strength, actually. Profit growth overall was about plus 17% in 2024.
17%, wow.
Yeah, and you see giants like JP Morgan, they were up plus 21.9%. Goldman Sachs, even more dramatic, over plus 70% profit growth.
Okay, those are big numbers, but why? What's driving that U.S. outperformance? Because that's where it gets really interesting, right?
Well, the sources point to a few things. Strong deal-making activity was one.
M&A and the like.
Exactly. Plus, consumer sentiment was surprisingly resilient, despite inflation worries. People kept spending. And there's this mention of an industry-friendly political climate.
The report used that phrase, rolled out the red carpet.
Something like that, yeah. It helps. Although they do flag potential risks down the line, like Trump's tariffs are mentioned as a possible future issue.
Right, a potential bump, but for now, conditions are stable.
Okay.
So the U.S. is strong. How does that compare to, say, China? Size versus profitability.
That's the perfect way to put it. China offers this really stark contrast. Their banks are enormous in size. The top four global banks, all Chinese, ICBC, CCB, ABC, BOC.
Dominating the size charts.
Totally. But profitability, that's going the other way. It's actually declining.
Yeah.
8 of the top 15 global banks saw their pre-tax profits fall in 2024.
So massive scale, but shrinking returns. What's behind that? What are the headwinds for China?
The big one is the real estate crisis. That's still casting a long shadow. Then you've got low interest rates, which squeeze their margins, the difference between what they pay for funds and what they earn lending.
Narrows the net interest margin, right?
Exactly. And just general economic sluggishness. Their response has been quite significant, though, rate cuts, plus a huge liquidity injection. We're talking 1 trillion renminbi.
Wow, RMB 1 yen. That's a massive attempt to stimulate things. Okay, so U.S. strong, China facing profit issues despite size. What about Europe?
Europe's picture is, well, challenging is probably the word. Western European banks saw profits fall in Innovate 5.47%, and in Central and Eastern Europe, CEV, it was down negative 4.5%.
So a decline across the continent, really. Why? Why is Europe losing ground here?
Multiple factors. ECB rate cuts have played a role, just generally low economic growth across the region, and political uncertainty doesn't help either.
It feels like we keep hearing about the fragmentation within Europe itself, hindering things.
It does. You see some domestic consolidation, like the nationwide Virgin Money deal in the UK, but bigger cross-border deals like the talked about UniCredit Commerzbank merger, they seem to stall. That fragmentation really does hinder deeper integration.
Are there any bright spots in Europe at all?
A few, yeah. Spain's outlook is reportedly improving, and banks like Barclays and Deutsche Bank did post some gains, so it's not universally negative, but the overall trend is down.
Okay. Let's look at Asia-Pacific, but beyond China. What's happening there?
It's quite a mixed bag. India, for instance, showed really strong profit growth, plus 13.5%. HDFC and SBI actually broke into the top 40 global banks list.
That's significant growth for India.
Definitely. And Japan's top 3 banks also did well, posting over 20% profit growth. But then you have this huge outlier in Japan, Norinchukin Bank.
Ah, yes, you mentioned them. They had a massive loss.
The biggest loss globally, actually, minus $11.8 billion.
Ouch. An $11.8 billion loss. What happened there? Specific investments.
Primarily, yeah. The report suggests they got caught out by misjudged bets on longer-dated U.S. government bonds. Interest rates went up when they perhaps expected them to stay low or fall. A big hit from interest rate risk.
The painful lesson in risk management. And other parts of Asia.
Elsewhere, places like South Korea, Taiwan, Vietnam, Thailand, their outlooks were lowered, mostly linked to their trade exposure, particularly to the U.S. economy.
Right, dependency on trade. So zooming out again globally, the overall profit growth picture slowed down a lot.
Dramatically. From 14% growth in 2023, it fell to just 3% in 2024. So that U.S. performance really stands out against a much weaker global backdrop.
And those big losses. Norinchukin, obviously, but others too.
Yeah, besides Norinchukin, the sources mentioned Flagstar Financial in the U.S. down negative $1.3 billion, and Metro Bank in the U.K. negative $265 million. Significant losses.
So let's bring it back to that core insight. Why is the U.S. outperforming so much?
Yeah.
The report offers some explanations beyond just the numbers, right?
It does. It touches on things like a meritocratic culture, maybe being quicker to reward performance, strong global networks that they leverage effectively, and just a generally more sort of entrepreneurial banking culture, perhaps.
Compared to Europe's lag.
Yeah, where the analysis suggests maybe slower action on opportunities, and again, that political fragmentation, making it harder to build truly pan-European champions.
Makes sense. And looking ahead, what are the big risks everyone's watching?
The usual suspects, but maybe amplified. Geopolitics, obviously. The potential for sharp reversals in interest rates. We saw what happened with Norinchukin. And specific regional crises like the ongoing situation with China's real estate sector. That's still a major concern.
Okay, so we've definitely taken a deep dive here. It's a picture of, well, a fragmented global banking landscape for 2025. The U.S. seems to be pulling ahead quite clearly.
Yeah, while China and Europe are navigating some pretty serious headwinds, it really underscores how these regional economies, while connected, are also quite distinct.
And those underlying factors, policy choices, maybe even cultural approaches, they seem to be driving these different outcomes.
Absolutely. The choices made in boardrooms and by policymakers are having very real divergent effects on financial performance globally.
So wrapping this up, what's the key takeaway for you, the listener? Think about how these diverging paths, this fragmentation in banking, might reflect broader shifts in global power, in economic resilience.
Yeah, and maybe consider what new opportunities or perhaps new vulnerabilities this fragmentation could create, not just in finance, but in the wider economy that you operate in every day. Something to keep an eye on.